Hey everyone, welcome back to Noob Selling Options. This is the channel where we completely ignore the noise and break down the actual, real-world data and execution behind massive market moves. Today, we are tearing into Broadcom. So AVGO recently took a pretty massive hit, right? It basically fell off a cliff from its all-time high of $481.57, all the way down to the $374 range right after their recent earnings report. Wall Street absolutely threw a tantrum over it. But you know us, where they see panic, we look for structure.
Real quick, before we get into the nitty-gritty of this Broadcom bloodbath and look at the exact option straight I put on to capitalize on it, do me a huge favor and smash that like and subscribe button. It seriously helps out the channel, and it makes sure you never miss out on these data-driven explainers. Okay, let's get into it.
Here's our game plan for today. First, we're going to calculate AVGO's exact mathematical valuation floor. Second, we'll map out the key technical support levels you need to watch. And finally, I am going to reveal the exact call option entry I used to play this setup.
All right, part one. Let's figure out AVGO's valuation floor. We're starting with the macro picture here to find out exactly where the mathematical bottom actually sits.
So right now, looking at the current valuation, Broadcom is trading at a forward PE of about 41.5, and they've got a projected 3 to 5 year earnings per share growth rate of 32.8%. If you do the math, that gives us a current PEG ratio of 1.26. Honestly, that's remarkably reasonable for a company that completely dominates its market. But, the textbook definition of absolute perfect value for a growth stock is a flat 1.00 PEG ratio. So what stock price actually gets us there?
Well, if AVGO were to hit that perfect 1.00 PEG ratio, meaning its forward PE perfectly matched its 32.8% growth rate, the stock would have to drop to exactly $295.86. That would be another 21% haircut from the $374 range. I mean, that would create an incredibly deep value discount. That number right there, that is our absolute rock-bottom mathematical floor.
But here's the thing you've got to keep in mind. Actually hitting that peg of 1.00 is super unlikely. High-margin monopolies almost never trade all the way down to a 1.0 peg during a massive tech expansion cycle. Broadcom has an undisputed monopoly in custom ASICs. They are literally co-designing the next-gen chips for Google, Meta, OpenAI, and Anthropic, the big dogs. Then, look at their AI networking mode. You physically cannot connect thousands of chips without their Tomahawk 5 and Jericho 3 AI fabrics. Throw in their insane 42% corporate profit margins after they integrated VMware. Yeah, it becomes pretty clear that the market has fundamentally mispriced a temporary guidance normalization, mistaking it for a structural slowdown. Which brings us to part two, the key technical support levels. Because, hey, fundamentals are great, but price action rules all. Let's look at the chart to see where the big institutional buyers are hiding. We are currently tracking three main zones of support: the immediate battleground, a major structural floor, and then our ultimate doomsday macro line in the sand. Let's grade these down so you know exactly what levels to set your alerts for. First up, the immediate $370 to $380 zone. This is the current battleground, and it lines up perfectly with a massive put wall in the options chain right at the $380 strike. Options market makers are heavily defending this zone through dynamic hedging. Basically, they're aggressively buying and selling the underlying stock just to keep their risk balanced. If AVGO can hold this level over a few consecutive sessions, it confirms a macro higher low, and the long-term uptrend stays structurally intact. Now, what if that breaks? Say we get some macro tech weakness or a sector rotation. Then we look down to the 345 to 350 range. This is a huge structural shelf and a secondary put wall. If we hit this level, it's going to push the relative strength index way down into deeply oversold territory, like below 30. And that, my friends, is exactly where institutional algorithms and deep value investors love to step in aggressively for a quick oversold bounce.
And this is where it gets absolutely fascinating. Our third level, that ultimate technical support zone of 295 to 305, which, by the way, was the cyclical correction low from early spring, perfectly bridges the gap with our $295.86 fundamental valuation floor. The technical chart and the fundamental peg math are literally pointing to the exact same doomsday support level. It's like a giant puzzle perfectly clicking into place.
All right, part three, the call option entry. We know the fundamental floor, we've mapped the technical, so how are we actually playing this? Let's talk execution. Here's exactly what I did to get long exposure.
I grabbed the December 18th, 2026 560 call option. I locked this bad boy in at a limit price of $14.30. By pushing the expiration all the way out to late 2026, I am giving this trade a massive amount of time value to play out while Broadcom just sits there and lets its structural revenue compound.
Now you might be wondering, why use options instead of just buying the stock? Well, remember, this is a calculated trade, not a buy and hold forever equity investment. If I wanted to buy 100 shares of Broadcom right now, I'd have to tie up over $37,200 in raw equity. Nobody wants to lock up that much capital for one setup. By using this specific option contract, I define my absolute maximum risk at exactly $1,430 per contract, so I get massive upside exposure to a trillion-dollar mega-cap leader for a tiny fraction of the cost.
The mechanics of this trade are super sweet. It's specifically designed to exploit the elevated post-earnings implied volatility. The market totally panicked because AVGO maintained its $100 billion AI revenue guidance instead of raising it. That's a classic mispricing. So as AVGO stabilizes at support and the trend reverses, this contract benefits from steady delta accumulation, meaning the option starts acting more and more like 100 shares as the price goes up. Plus, we get localized gamma expansion, giving us accelerated profits. Honestly, I don't even need the stock to hit $560 to see exponential gains. And the timing? It perfectly captures the massive hyperscaler deployment cycle hitting in the second half of 2026.
So we've walked through the $295 perfect valuation floor, we mapped out those $370 put walls, and we just broke down a very high-leverage 2026 options trade. Now, I want to leave you with this question. Is AVGO forming a bottom right here, right now, in this $370 zone, or are we destined to flush down and test that ultimate $295 peg floor? Drop your thoughts in the comments below. I'd love to hear what you guys think. And hey, if you got value out of this explainer today, please make sure to hit that like and subscribe button for more actionable setups. Catch you guys on the next one.